The most important thing to happen to gold in a generation just happened, and the people whose job it is to keep you informed said almost nothing about it. That is not an accident. That is a business decision. Here is the answer to why you clicked, plainly in the first breath, because you deserve it up front. Gold just quietly passed a milestone that reorders the entire map of global money. Among all the assets that the central banks of the world hold in their vaults as reserves, gold has now climbed past the euro. It is now the second largest reserve asset on Earth, sitting behind only the US dollar. Think about what that sentence means. The shared currency of an entire continent, the money of hundreds of millions of people, and gold now outranks it in the vaults of the people who manage nations. That is the level Wall Street is praying you ignore, and I'm going to spend the next few minutes showing you exactly why they would rather you never sat with it. If you have a lifetime of savings in a retirement account, this is not trivia. This is a signal being sent by the most conservative, most patient, most risk-averse buyers that exist on the planet. Central banks are not day traders. They do not chase. They move slowly, they move quietly. And when they finally shift the ground under their own reserves, they are telling you something about the next 20 years, not the next 20 minutes. In my years in the gold and silver world, I have learned to watch what the big money does with its own vault, not what it tells you to do with yours. And what the big money did, when almost no one was looking, was pick metal over a major paper currency. Let me walk you through why that happened, why it matters to the money you spent 40 years building, and why the financial channels have every reason to keep it small. Start with the character in this story, because a number on a screen never changed anyone's mind, but a person might. Picture a woman who spent her career as a school teacher. She retired with a solid nest egg, the kind you build by being careful for decades, and she did everything the responsible people told her to do. She holds paper, she holds promises, and every year she notices the same quiet thing you notice, that the same grocery cart costs more, that the same tank of gas costs more, that the dollars she saved buy a little less of the life she planned. She did nothing wrong. The rules of the game changed under her feet, and no one rang a doorbell to tell her. She is the reason this milestone matters, because the same force pushing central banks toward metal is the force thinning out her savings. Now, why gold over the euro? And why now? To understand it, you have to understand what a reserve actually is. When a country earns more than it spends with the rest of the world, it piles up the surplus in a form it can trust. For decades, that meant the dollar, and after that, the euro, and a stack of the safest bonds those governments issue. The whole system runs on one assumption, that those paper claims are as good as money, and always will be. That assumption just took the worst hit of your lifetime. Here is the mechanism, and this is the part the financial press waves past. A few years ago, in the middle of a war, one of the largest holders of reserves on the planet watched a big share of its foreign holdings frozen overnight, walked away by the very governments whose paper it had trusted. It did not matter how many bonds that country owned. With a keystroke, they became unusable. Every central banker on Earth watched that happen and drew the same private conclusion. A reserve you cannot access in a crisis is not a reserve. It is a hostage. And there is exactly one reserve asset that cannot be frozen by a foreign government, that answers to no politics, that sits in your own vault under your own control. It is the yellow metal that has been money for 5,000 years. That is the engine underneath the milestone. Central banks did not fall in love with gold. They fell out of trust with paper. For 3 straight years, they bought at a pace the world had not seen in half a century, buying well over 1,000 tons a year, roughly double the average of the decade before. And here is the tell that should stop you cold. They kept buying even as gold pressed against record highs. Think about how strange that is. These are the most cost-conscious institutions in existence, and they were willing to pay top prices, near records, because to them, the point was never the price. The point was safety. When the people who manage entire nations decide safety is worth paying record prices for, that is not a market. That is a migration. And it explains something that has been quietly driving analysts a little crazy. For as long as most of us have been investing, gold followed a simple rule. When the return you could earn on safe bonds went up, gold went down, because gold pays you no interest and bonds looked more attractive. That rule was reliable for decades. Recently, it broke. Gold climbed even while those safe returns stayed high, which under the old rulebook should never happen. Why did the rule break? Because the buyers changed. The old rule described investors chasing yield. The new buyer is a central bank that does not care about yield at all. It cares about whether its reserves can be taken away, and metal cannot be taken away. Let me name the enemy in this story plainly, because you should know who benefits from your silence. The big banks, the trading desks, the financial media that leans on their advertising. They all make their living selling you paper and managing paper and taking a slice as it flows. A world that quietly re-rates hard money over paper is a threat to that entire arrangement. So when the single most important reserve shift in 50 years happens, it gets one sleepy line on the ticker, and then nothing. It is not a conspiracy of villains in a room. It is simpler and more honest than that. Nobody in that world has any incentive to hand you the one fact that might make you rethink where your savings sit. Now I owe you the honest part, because a guide who only shows you the upside is not a guide. He is a salesman, and I have watched too many people get hurt by salesmen. Gold does not move in a straight line, and anyone who tells you it does is lying to you. I have seen it fall hard for reasons that had nothing to do with its value. Years back, when the Fed merely hinted it might slow its bond buying, gold dropped by roughly a quarter, and nothing about the actual metal had changed. Around the same era, the exchanges raised the cost of trading silver on margin, and silver fell about a third in a matter of days, while the world's silver supply had not budged 1 ounce. Forced selling hits hard assets because they are liquid, because in a panic, people sell what they can, not what they want to. So understand the risk. There will be shakeouts. There will be stretches where your metal sits still or drops while the headlines mock it. What I cannot tell you is the day or the level. Anyone who claims to know the timing is guessing with a straight face. What I can tell you is the direction the largest, most patient buyers on earth are quietly moving, and that has not changed. That brings me to the moment I want to talk to you directly, one-on-one, because everything I just described is exactly why I put something together for people in your position. If you are like most of the folks who watch this channel, you have $100,000 or more in a retirement account, an account you spent a lifetime filling. And the whole reason you are still watching is that some part of you senses the same thing the central bank sensed, that the ground is shifting under paper. So here is what I want you to have. My family put together a free resource called the Retirement Wealth Protection Guide. And the reason I am mentioning it right here, right after the milestone, is that it answers the obvious question that milestone raises. If the most conservative institutions on earth are diversifying into physical gold, how does an ordinary American do the same thing inside the retirement account they already have? The guide walks you through exactly that, how retirees can move a portion of an existing IRA or 401k into physical gold and silver, real metal, without taxes and without penalties, using a structure that has existed for years. This is not just for insiders or the wealthy. If you have $100,000 or more in any retirement account, this is written for you. It costs nothing and there is nothing to buy. From our family to yours. If you are watching this on your TV, just scan the QR code on your screen. If you are on your phone or your computer, go to readfamilyguide.com. Then come right back, because the next part is where this really lands. Because here is what almost nobody connects. The milestone is not only about gold rising, it is about what gold is rising against. When metal climbs past a major currency in the world's reserves, it is measuring the slow erosion of confidence in paper itself. And that erosion is the exact same force that has been quietly shrinking what our school teacher savings can buy. The two are one story. Central banks are protecting nations from it at the top. She is living it at the kitchen table. And the tool is the same. Let me give you the history, because this has happened before, and the pattern is worth your time. There was an era when the dollar itself was backed by gold at a fixed price, and 8 powerful nations pooled their reserves to defend that price, spending their own metal to hold the line. They held it for years. Then the pressure became too much. They gave up, and within a short stretch, the whole arrangement was abandoned. Not long after, a president stepped up to the microphone and told the country he was closing the gold window, cutting the last tie between the dollar and metal, and he called it temporary. It was never reversed. From that day, the dollar has been backed by nothing but faith. And here is the number that should stay with you. In the decade that followed, gold went from the old fixed price of around $35 an ounce to over 800. That is not a typo, and it is not hype. It is history. When faith in paper cracks, metal does not appreciate politely. It re-rates. And notice the human cost buried in that history, because the school teacher has company across the decades. When Britain decided to sell off around half of its national gold, it announced the sales in advance at what turned out to be a generational bottom, practically inviting the market to front-run its own government. When a currency crisis swept through Korea, ordinary citizens lined up to hand in their personal gold, their wedding rings, to help their nation, right near a major low. Regular people, again and again, parted with metal at the worst possible moment because the official voices told them everything was fine. The pattern is always the same. The patient hands accumulate quietly, while the anxious hands let go. There is one more piece of history that ties a bow on all of it, and it is the piece the paper world hopes you never learn. In the depths of the last century's great crisis, the government simply changed the price of gold by decree. Overnight, by the stroke of a pen, it revalued the metal upward by roughly 2/3 against the dollar. It did not ask permission, it did not hold a vote you were part of. It looked at the debts it could not pay, and it re-rated the money to match. That is the quiet power hiding behind all of this. When a government owes more than it can ever repay honestly, the value of paper is not a fixed law of nature. It is a policy choice, and history shows that choice gets made again and again at the expense of the patient saver holding the paper. Gold is simply the one thing that sits outside that pen. And understand how thin the physical layer really is beneath the paper mountain. On the exchanges where the price is set, there are vastly more paper claims to metal than there is deliverable metal sitting in the vaults to satisfy them. It works fine as long as almost no one asks to take delivery, which is almost always. But the milestone we started with is a story about the largest players quietly asking for the real thing, insisting on metal in their own custody rather than a claim on someone else's shelf. When the biggest buyers stop trusting the paper and demand the physical, the gap between how much paper exists and how little metal backs it stops being a footnote and starts being the whole story. Here is the midpoint turn, the part that actually changes how you should think about all of this. Everything I have described so far is about what already happened, the freeze, the buying, the milestone. But the reason it matters to you is what it predicts. Watch the ratio of stocks to gold across history. There have been moments when it took a mountain of stock market value to buy a single ounce, times of mania when everyone believed paper assets would rise forever. And there have been moments when that ratio collapsed toward 1, when an ounce of gold and the whole stock index nearly changed places in value. We swing between those two poles across generations. And the direction of the swing, the direction the central banks are voting for with their own vaults, is away from the paper pole and toward the metal pole. That is the part almost nobody on the financial channels will draw a line under for you. Consider why the timing is what it is. We are living through an era where governments owe more than at almost any time in peacetime history, where the temptation to let inflation quietly shrink that debt is enormous, and where the central bank sits under new leadership and a divided house, some voices wanting to tighten, some wanting to ease. In that fog, the honest truth is that the people steering the money do not fully agree on the path. When the stewards of the currency are divided, the value of the currency is exactly what gets tested. Central banks know this better than anyone. It is why they are stacking the one asset that does not depend on any committee agreeing. Let me speak to what you actually own, because this is not about backing up a truck. I have seen this movie before, and here is how it tends to go for the people who do it well. They do not bet the farm. They take a portion, a sensible slice of what they have built, and they move it into something that cannot be frozen, cannot be printed, and does not depend on a stranger's promise. They own the real metal, not a paper claim on metal, because in the moment that matters most, a promise is only as good as the party making it. And they size it so that a shakeout, and there will be shakeouts, can never force them to sell at the bottom the way our school teachers' generation was forced. That is not a prediction. That is a principle. And principles age better than forecasts. Now, understand where we sit on the timeline, because this is the whole point. The smartest, most patient money on earth has already moved. The milestone is not a forecast of what central banks might do. It is the receipt for what they already did. But the pension funds, the mainstream advisors, the neighbors at the dinner table, they have not caught up. Most people you know have no idea gold just passed the euro in the world's vaults. By the time it is on the front page, by the time every advisor is telling every client to own some, the quiet part of this move will be finished. You do not get to be early once the whole world agrees. You are early right now, in this stretch, precisely because it still feels quiet, because nothing about it feels urgent yet. That quiet is not a sign you have time to spare. It is the signal itself. Which is exactly why I want to make you one more offer. And this one is about more than you. It is about what you leave behind. That same free retirement wealth protection guide covers not just how to diversify a portion of your own savings, but how to think about protecting what your children and your grandchildren will one day inherit, so the wealth you spent a lifetime building does not quietly erode in the hands of the next generation. And for those of you with $100,000 or more who have watched all the way to here, mention that you saw this full video, and my family will set up a free one-on-one educational web conference just for you. No obligation and nothing to buy. There is no fake deadline on this, and I would never insult you with one. The only honest reason to act now is the one I already gave you. The window where a decision like this is still cheap and still easy is the window when it does not feel urgent, and that window is open today. From our family to yours, if you are watching on your TV, scan the QR code on your screen. If you are on your phone or your computer, go to readfamilyguide.com. So let me bring you back to where we started, to the milestone the financial channels barely whispered. Gold has passed the euro to become the second largest reserve asset held by the central banks of the world, behind only the dollar. That is not a story about traders. It is a story about trust, and about who is quietly protecting themselves while the rest of the crowd is told to look away. Remember the school teacher who did everything right and still watched her savings thin out because no one handed her the one fact that mattered. The whole point of these few minutes was to make sure you are not her. The big money already moved. The only question left is whether you understood the signal while it was still quiet, or whether you waited for permission that was never going to come.